All right. What's up, guys? I'm nobody special. Happy Friday to all you melonheads. Power Hour is here. We are going to end the week. What a lousy week. My God. This week has just, across the board, sucked. But you know what? The good thing about lousy weeks, they're over. This week is over. I shouldn't have said that. There's like 45 minutes left in the trading day. Who knows what might happen in the next 45 minutes? The market is selling off again today. It's not a huge sell-off, but it looks like it's gaining steam in Power Hour. So I don't know what's going to happen right now, but there is a lot to talk about today. We had a big update with Evergrande today. I just put out a video a few hours ago about that Evergrande update. This may be it for them. I don't know if it is or it isn't. I mean, this company has managed to stay alive a lot longer than I would have thought. So we'll see what goes on there. There's a lot going on in energy markets and, the oil variant and all of that. Precious metals had a lousy week. They're not doing what they're supposed to do, i.e. act as a flight to safety or a safe haven asset, which means this market is not done selling off. That being said, I did a video yesterday saying that I don't think this is the big sell-off that this, what we've seen this week, the sell-off on the oil variant. I don't think this is the big one. All right, and I talked about that in my video yesterday. We'll get into a little bit more detail about that today. But with that, let's get into this one. We are going to shrink my big fat melon of a head because I have some absolutely vital news. Actually, not really. I like to start the live stream with something a little ridiculous. And here we go. Ridiculous. The hamster that trades cryptocurrencies and profits. So if you've ever wondered who is taking the other side of your trade when you buy in cryptocurrency, you never know. It might be a hamster. I S you not. Let's get into this story. Now, this is a little old. This is from November 11th. This is on Ripley's Believe It or Not. From Bitcoin to Ripple, Dogecoin to Ethereum, understanding the ins and outs of cryptocurrencies and how to profit from them isn't for the faint of heart. After all, cryptos have a reputation for incredible volatility. Tens of thousands can be made and lost in a matter of days or even hours. Yet the promise of getting rich quick continues to draw people to alternative money. And there are plenty of gurus out there who claim to have all the answers, including a hamster named Mr. Gox. Mr. Gox. Yes, the crypto hamster that is named after a very famous crypto fraud exchange that collapsed and ripped people off. Yes, Mr. Gox, the crypto hamster guru. Yep, you read that right, and don't let the adorable appearance, furry body, or whiskers fool you. This little rodent is making it rain. Here's the lowdown on the crypto-crazed critter and how he got started. The Livestream Hamster, the German hamster, trades cryptocurrencies in a rigged container known as the Gox box and has been doing so since June of 2021. The box contains 2 tunnels. Based on the hamster's choice of tunnels, specific cryptocurrencies get bought and sold. While all of this might sound haphazard and random, no, this sounds totally scientific, totally well thought out and good DD all around here, Mr. Gox. Mr. Gox is getting results. As of November 10th, 2021, he boasts a portfolio with a time-weighted rate of return of 28.42%. It's a hamster that trades crypto based on the tunnel that he picks. Okay. Signs of a market top? You be the judge. I just throw them out there. So I was looking in a little bit into Mr. Gox here, and I came across this on his Twitter feed, which he has 18,600 followers on Twitter. We feared this day like no other and are truly shocked for it to happen just now. In deep sorrow, we have to announce the loss of our beloved furry friend. It seems Mr. Gox is no longer with us. Cut down before his time. The crypto trading hamster really cut down in his prime. He had so many trades to make. Now we're never going to know whether he would have bought Shiba Inu or not. I guess we're stuck with Max Kaiser for our Bitcoin maxi entertainment from now on. So I was looking into this a little bit more, and I went over to his Twitch feed because I had to know what was going on. And when I got to his Twitch stream, I found that Mr. Gox had 15,400 followers. Okay? 15,400 followers. And my YouTube channel has about 4,000 subscribers. Yeah. So it's good to know that if I work my butt off and if I keep looking at charts and reading articles until my eyeballs bleed, and if I work really hard, maybe in a couple of years' time, I might have as many subscribers as Mr. Gox, the dead crypto hamster. Depressing thoughts for the day. Anyways, I thought this story was funny, so I thought we'd get into that. I see a couple of familiar faces in the chat. Hello, Mike Robin. How you doing? No bolivars accepted. Oh, that is too bad. I would love to pay with my Venezuelan bolivars. We do not wrestle with flesh and blood. Whoa, there is a lot going on there. Evening Treasury. Crypto hamster better than an octopus, I suppose. You know, I'd take the octopus. Supposedly octopus are incredibly intelligent. So I would take the crypto octopus over the crypto hamster any day. But hey, you choose your crypto animal spirits, folks. Again, I'm not a financial advisor. If you want to go with a hamster over an octopus, ride that rocket, baby. Nice to know a hamster can beat me at trading. I share your chagrin, Nicole Post. Can Gox pick silver mining stocks, please? I'm struggling. Well said, Cesare. I am as well. Hello, Volker. The hamster got liquidated. That he did. And, Mr. Gox has illustrated a very important point, folks. It's important to have a backup plan. It's important to have contingencies because you never know when your investing guru hamster might die, and you have to be prepared for these events. Anyways, with that ridiculous story out of the way, let's get into a little bit about what's going on here. Now, I'm going to have to refresh some windows as we go on today because it looked like this sell-off was picking up a little bit of steam. Maybe it's bouncing back a little bit to close out the day here. The Dow's down 225 points. It was down 300 a few minutes ago. The S&P not doing much better, down 1.3%. The NASDAQ down 2.5%. Tech is getting crushed today. Russell not doing any better. The oil chart, look at this one. Oil was having a pretty good day, and then right around 10 a.m., quarter to 10, I don't know what happened, but down, down, down we go. Now, oil had an okay week. You know, we had that ridiculous sell-off last Friday when the oil variant came out, and then that sell-off continued into Monday and Tuesday. I did a video earlier this week about energy, and we'll talk about that a little later. I bought some call options in XLE, which is an ETF that's spread out across the oil space. I was up about 20% on those calls a few hours ago. I am probably not up that much now. Another thing to watch, gold today finally acting the way it's supposed to as a safe haven. Gold has been rallying as the market has been selling off, so that's good. Silver has been rather do lately. Check out the head fake here in the afternoon in silver. There's your Mr. Spoofy doing his thing. But we're coming back up. We'll talk about silver a little bit later also. I'm keeping an eye on silver. I continue to dollar cost average slowly into physical as I always do on a regular basis. But I may be going into silver again. I don't want to say in the near term, but I'm watching for an opportunity. I think we may have a better price available to us soon. And the other thing I'm watching today, the bond market. Yields down 7% on the 10-year. Okay, now keep in mind, yields and prices inversely correlated, so that means people are piling into bonds today. This is a flight to safety that's going on. When you've got yields down and you've got gold up, something has investors spooked. And I'm going to go out on a limb and say I don't think it's the oil variant. I think it's Evergrande. Okay, I did a video earlier today about Evergrande. We'll talk a little bit more about that. But I think that's what's got the market spooked. I think that bird may be coming home to roost soon. I don't know. If you would have asked me a few weeks ago, I would have said it would have happened already. But there was a big development with Evergrande today, and I think it's probably got a lot of fund managers really spooked. We're going to keep an eye on that one. And another reason why I think this sell-off today could be related to Evergrande is because of what's going on in crypto and Bitcoin. All the cryptos are selling off across the board right now. Bitcoin down 6%, below 54,000. And, we've been talking about the Tether story. We've been talking about the Evergrande story. And if I'm right, and this is Evergrande that's got the market spooked, then you would expect to see this sell-off in crypto as well. And that's what we're seeing here. So that's one to keep an eye on. Anyways, we'll get back to all of that in a little bit, but I want to talk about this story right now. This is the jobs report that came out today. Big disappointment in the jobs report. On the surface, the economy added 200,000 jobs, so I'm sure certain people will be in the press spinning this as this was a good jobs report, but it really wasn't. There wasn't a lot to like in here, especially considering the backdrop of the report we got last month. U.S. hiring stumbles in November as economy adds just 210,000 new jobs. Economists expected payrolls to increase by 550,000 in November. So we didn't even get half of the jobs we expected. Now, there was some upward revisions of previous months. So if you add that to the expectations, maybe it wasn't quite as bad. But still, just really disappointing numbers. U.S. job growth significantly undershot expectations in November, suggesting that difficulty in attracting new workers is weighing on the labor market's recovery from the pandemic, even as cases dissipate nationwide. Labor Department said its monthly payroll report released on Friday that payrolls in November rose by just 210,000, well below the 550,000 forecast by Refinitiv. It marked the worst month for job creation so far this year. Now, here's where this number did not make sense to me. The unemployment rate, which is calculated based on a separate survey, dropped more than expected to 4.2% from 4.6%, the lowest level since the pandemic began. Now, the problem with that, we got half as many jobs as we were expecting. The unemployment level ticked down almost 0.5%. So that doesn't really make sense unless you would think it was workforce participation. However, later on in the article, it says what happened here? It's jumping around. It says the labor force participation rate.
Fidelity.
Shut up, ads. The labor force participation rate rose to 61.8%. So unemployment ticked down, labor force participation went up, but the economy only added 200,000 jobs. Okay, something in those numbers doesn't jive. There's something wrong there because for so few jobs added with such a big drop in the unemployment rate, you would expect to see a drop in workforce participation. But that's not what we got. We got an increase in workforce participation. So there's something up in these numbers. There's either too much seasonal adjustment going on, or one of these is being misreported, or fat fingers. I don't know. But that stuck out to me as odd. Okay, I'll just say that. Now, the other thing I want to point out in this jobs number here is that wages rose 4.8% from a year ago, and the survey of households offered a brighter outlook. Okay, wages rising 4.8%. That may seem like good news, but you need to keep in mind CPI is at 6.2%. That means wage growth is still not keeping up with inflation. That means people's lives are still getting harder. That means we're still getting poorer. Okay, our money is not going as far. Our salaries aren't growing fast enough to keep up with the rate of inflation. Now, we get another CPI read next week. I believe it's on Wednesday. And my personal opinion, I think it comes in a lot higher than 6.2%. I really do. We are now like a month or a year and a half into this bull run in real estate. And the CPI owner's equivalent rent statistic is still not showing any increase in rent in the official CPI numbers. And folks, we all know that is total BS. All right, nationwide rents are up somewhere from 15 to 30% on average. All right, the rent has gone up so much this year, and yet CPI is still telling us it's only up a fraction of 1%. All right, so eventually that number has to catch up. And I've done videos in the past about owner's equivalent rent and how it typically lags. Usually a big run in home prices will precede a spike in owner's equivalent rent by anywhere from a year to 18 months. Well, we're now 18 months into this real estate bull run, this big real estate bull run, I should say, that started last summer, and the owner's equivalent rent still hasn't gone up. Now, owner's equivalent rent is the single largest input into the CPI read. It accounts for almost a quarter of the index. So if we get a big spike in rents, which we're way overdue for in the CPI number, then that CPI number could go from 6.2% to a heck of a lot higher in a big hurry. Now, we've gotten a little bit of relief in energy markets recently. Maybe that offsets some of it. I don't know. I haven't really looked that closely into the CPI numbers recently, but we'll get more info. We'll get more on that next week. But in a nutshell, at least right now, even using that lower 6.2% inflation number, which we all know is garbage, it's much higher than that. Wages are just nowhere near keeping up with inflation. People's lives are getting harder. So we're going to keep an eye on that. And I don't expect that to have any kind of impact on Powell or any of the decisions on tapering. I think at this point, with them retiring the word transitory and all, I think they're now committed to fighting inflation. And again, with the unemployment rate ticking down, again, that didn't make sense to me. But I don't think this changes any of the plans at the Fed. I'm seeing a lot of channels are starting to say they're not going to taper. They're never going to taper. I really don't believe that. I think they're going to taper. I think they're going to cause problems. But I think they're going to do it anyway. That's just my thoughts. Anyways, reading a couple of your comments here. 10-year is 1.3%. I know, Nicole. I was very surprised to see that drop so much today. We'll talk in a few minutes about the 10-year again, about that video I did yesterday and how I think the United States has this gradually reducing tolerance for higher interest rates, and that line is coming down, and next year it will be somewhere between 2.5% and 2% on the 10-year, and I think that is when all hell breaks loose. Was reading today that the Evergrande CEO disappeared. Anyone know if it's true? Wow, Volko, I hadn't seen that one, that he disappeared. I had read that he was summoned by the local government in Guangdong, which I don't know what that means when you're summoned in communist China. It can't be good. They've been liquidating his stock. They've been selling his art, his houses. They're cleaning him out, which I think is really a political maneuver because they're going to sell off everything he has, which is nowhere near enough to pay for Evergrande's debts, but that's what they're going to do. I wouldn't be surprised to see him disappear. I think they're going to keep selling his stuff before that happens, though. But I'll keep an eye on that. I hadn't heard about him disappearing. Hello, Tom Stencil. Hope all is well. I bet Mr. Gock's numbers will slide. Yeah, I don't know. Maybe a dead hamster can even outperform us. He certainly gets more subscribers than I do. That killed me. A dead hamster has almost 4 times as many subscribers as I do. Well, whatever. Hashtag life goals. I want to have as many subs as a dead rodent. Silver will be absolute last thing to take off. It's the Reichstag of this war. That's an interesting analogy, Nicole. I agree. Maybe it will be the last thing to take off. That's a good point. It's certainly not the first thing I'm going to buy. I have a lot of things that I'm looking at now. I continue to dollar cost average into silver in small amounts. The same thing with Bitcoin and gold and Ethereum. That's my inflation hedge. Again, I kind of regiment my money. I break it up into different portfolios, different compartments, and I have a different strategy in each compartment. That's how I hedge against my own decisions being wrong, is I make sure I have a couple of different approaches. So I continue to slowly build up in these inflation hedges, and then in my brokerage account, I have things like the call options in XLE that I bought, the trade on corn, the LNG. Oil to 100 plus. Cajun, I believe that is correct. I think we probably see that at some point this winter. It's certainly not looking that way right now, but I don't buy this sell-off in oil. I really don't. All right. I'm not sure the market is spooked by Evergrande. Their bankruptcy is a foregone conclusion. I think the sell-off is telling JJ to back off the tough talk. Bonds are dumping because money is. That's an interesting thought. It could be the market freaking out, front-running Powell. But, looking at the reverse repos, you still got so much liquidity that's out there. The Fed is still pumping, right? They're telling us they're going to slow down the pump, but they are still pumping. So there's still just so much money out there. They're still making more of it. They're just making it less fast. I'm not really buying that this is the taper. I'm really not. Maybe early fears of the taper. I'm also not buying that it's the oil variant. I really don't think that's what's going on here either. Maybe the CEO's selling, all these insiders suddenly dumping their stocks, which I wonder, what are they buying? What are they doing? I really doubt Jeff Bezos and Bill Gates and Elon Musk are just going to sit in cash with inflation where it is. So I'm really curious what these guys are buying with all the proceeds of these stock sales. Anyways, just my thoughts. Leaving stocks and moving to safety. JJ needs to get more more C at the party. That's interesting. Way too important figure. They need heads to roll, not disappear, and not the way this government operates. Mike Robin, I think you're talking about Mike Bender. I'm sorry, I keep calling you Mike Robin. I think you're referring to Hui Kai-yan and his alleged disappearance. It wouldn't surprise me to see him disappear. I mean, they've disappeared tennis stars. They've disappeared Jack Ma before. So, it wouldn't be unprecedented if they just disappeared him. But I think they're going to, they might turn him upside down and try to shake the loose change out of his pockets before they outright disappear him. I wouldn't be surprised to see that. They'll keep liquidating him as long as they can. Excuse me. Will you decide to add silver before or after the next CPI report? I probably won't add any silver before the next CPI report. Again, my dollar cost averaging, that's kind of on a set schedule. So I don't try to time the markets. That's really just me building up my inflation hedges. But in my brokerage account, I do eventually plan on going heavily into precious metals, but not until after I see the big sell-off that I'm anticipating, because I think precious metals will sell off when the market sells off. They'll sell off big time, just like they did in March of 2020. And then at that point, that's when I plan to pile in. Now, I'm looking at different ways to do that, because planning to pile into physical metal to try to capitalize on a market sell-off doesn't always work, because a lot of the precious metal dealers, the bullion dealers, they just jack up the premiums when the metal sells off. So, when the market tanks, when the market tanks next year at some point, I think those premiums are just going to go up. So you're not really going to be able to get a big discount on the physical metal. So I'm looking into things like Kinesis, like PSLV, other possible ways where I could get safe exposure to silver, but I will not touch SLV, I can tell you that. Can't help but wonder if they tank the oil market to keep a lid on November CPI numbers. Conrad, I think that is exactly what happened. That's an excellent comment. I really think this overhyping of the oil variant that I keep saying, I keep calling it that, I think that's about the inflation number. And I'll tell you, world leaders, they're not stupid. Some of them are stupid. But on average, in aggregate, I don't think they're that stupid. They're careless, they're reckless, they're greedy, they're selfish. But I don't think they're stupid. They know what higher food prices and what inflation means for their own power and their own longevity, right? I mean, French Revolution, the Arab Spring, right? When food gets too expensive and people can't eat, they get pissed off, and that is not good for the ruling class. Okay, so they're taking inflation seriously now because they realize their power is at risk because of what we're looking at with inflation. And I keep saying, watch those fertilizer markets, man. Those food prices are going to go up next year, and they're going to go up big. And next summer or next fall, when those crop yields start ticking down because farmers cut back on their fertilizer application, boy, you better watch out for what food prices do. And that's why I bought my January 2023 call options and ticker CORN. Again, not a financial advisor, not financial advice. Do your own research, your own DD, arrive at a decision right for you based on your unique situation. But I really like commodities, in particular food and energy right now, because I think this inflation story is really gaining steam. If Evergrande crashes, what will happen to Tether? Svetoslav, did I say that right? I can't tell you exactly what happens to Tether because I don't know if Tether is directly exposed to Evergrande. I can tell you, looking at the sell-off in Bitcoin today and timing it with the news in Evergrande that just came out, it's not good. All right. We know Tether has a large exposure to commercial paper. We know that for a fact based on Tether's own attestations, which are not audits. And we know none of that commercial paper is in the United States. because representatives of all these major firms in the U.S. have said, no, we don't do any business with Tether. They're not allowed to. So where can you get $60 billion or $30 billion worth of commercial paper outside of the U.S.? China. I mean, it's China. So we know Tether has a lot of commercial paper in China. Where and who it's with is anybody's guess. They say it's not with Evergrande, but they've proven themselves to be liars in the past, so I'm not going to take their word for it. But it doesn't matter, really, if it's just Evergrande, because when Evergrande goes, a lot of other stuff is going to go with it, right? The same way when Bear and when Lehman went, they took all the other banks down with them. Because a collapse in an outfit that big and that much debt going bad is going to have all of this counterparty risk, and all these derivatives are going to come unwound. And I think we'll see Chinese commercial banks start to fail. And when that happens, when that spread happens, the fallout from Evergrande, that's going to hit Tether. That'll definitely hit Tether. And that's when we find out just how good Tether's reserves really are, if they even exist. And again, if that happens, if Tether goes, you can expect a sell-off, my guess, somewhere between 50 and 80% in crypto markets. I really do. Now, I've said this before, crypto could rally another 100, 200, 300, 400% before that happens. So I'm not trading as if that could happen any day now, but I'm prepared to take that hit if it happens. My crypto strategy is super long-term. I don't plan on selling any of my crypto assets for at least 10 years. And I think if you zoom out 10 years from now, the Tether collapse will not even register on the chart for Bitcoin and Ethereum. All right. Some of the altcoins, when the Shiba Inu, Doge, all these altcoins that are out there, they're going down. They're going to stay down. I don't touch those things. All right. Not with a 10-foot pole. But yeah, I would be very surprised to see Tether come out unscathed from an Evergrande collapse. Let's put it that way. Don T, thank you, sir, for the super chat. Thank you for supporting the channel. Maybe schedule your dollar cost averaging silver purchases after options expire each month, since that usually seems to drive down prices. You know, I never really thought that's actually a really great idea, Don. Thank you for the super chat, and thank you very much for the really great idea. Might have to look at that. Because you're right. I would say not after. I'd say the day before or the day of even, because it seems like the day of expiration or the day before the options expiration is really when the price smashes seem to reliably happen, right? We've seen it how many times this year, just about every month. But again, the dealers, they tend to jack up the premiums every time that happens anyway, so you never really get the benefit of the discount. But I like that idea, Don. I'm going to look into that. There are rumors that they're linked to Chinese real estate. Fact is, HSBC is exposed big time to commercial real estate. Evergrande fail will be a bad event. I agree, Mike. I think the Evergrande collapse is going to be a massive event. We have no idea how big it could be because we don't know about the derivatives exposure. And that's, it was the people not paying their mortgages in the States was the match that set everything off. Then you had the mortgage bonds that were, and the CDS that was leveraged against those mortgage bonds, which were derivatives of those mortgages. And then you had the CDOs, which was a derivative of a derivative of a derivative, right? And who knows what a mess the Chinese financial institutions have made with credit default swaps and the derivatives of these Evergrande, these developer bonds, and all the debt. There is really no telling just how grotesque the corruption has been in the Chinese financial system surrounding this debt. And I think we're going to find out. And, you mentioned HSBC. Don't forget UBS. Don't forget BlackRock. Ashmore, this London-based fund manager, that they've been buying up Evergrande's debt, for pennies on the dollar. Well, what are they doing with all that debt? Are they using it as collateral for margin activities? Or we may find out. And again, that's why I think this sell-off today that's going on, I think this may be related to Evergrande more so than the oil variant and the taper. I really do. Fed knows that foreclosures are coming, and they're waiting to prop up stock markets, pensions with the liquidity. They can't have everything drop at once, in my opinion. It's an interesting theory, Sean. Housing prices are certainly elevated, and that you could make a good argument that we're in another housing bubble right now. Keep in mind, you still have, how do I say that? You still have a shortage of supply in the housing market. There's no shortage of buyers. And it's not, at least to me, well, no, I have to say that, I have to correct that. There's one sign, in my opinion, that shows we could be in a housing bubble. And that's the fact that you've got institutional buyers are buying up residential real estate now, single-family homes. That tells me we could be getting into bubble territory, right? Because that's speculation. And why are these funds getting into real estate right now? Because they can't get yield anywhere else because bond yields are so low. And bond yields have to stay low because the debt mountain in the U.S. is so big that the markets are going to freak out if bond yields get any higher. So we could be getting into bubble territory right now. But again, there's still a lot of buyers. There's still a supply-demand imbalance. So I don't think it will be U.S. residential real estate that sets it off this time. All right. U.S. residential real estate will almost certainly go down in the toilet along with every other asset class that sells off if and when the big one happens. But I don't think it'll be U.S. residential real estate that triggers it this time. It could be commercial real estate in the U.S. It could be Evergrande. It could be the rate hikes. I really don't know where it starts. But Mike Bender, sir, thank you for the super chat again. By the way, Bitcoin just made the long-expected dip to drive out leverage. If you intend to buy, usually when all are scared is a good time to buy. There is a lot of leverage going on in the crypto space, Mike. That's a good comment. And, especially with a lot of these DeFi apps and these lending apps, people have taken out so much margin to buy up crypto. And these big dips that we're seeing, it could be the whales. It could be the institutions that are stop-loss hunting. They're triggering those margin calls. They're triggering those stop losses, knowing that once they get to that point, the sell-off gains steam and it drops really fast, and then they can buy up at a discount. So you're right. That could be what's happening right now. And again, sir, thank you for supporting the channel. All right. With that, I think we are going to shrink me again. And we are going to get into what actually happened with this Evergrande story today. Come on, Melonhead. Shrink that melon. There we go. So to start, again, I'm not going to rehash all the details of this because I just did a video on this earlier today, but I'll summarize it very quickly. Evergrande filed with the Hong Kong Exchange.
In boxing or any other business, one day
ads.
you're going to take a hit you didn't see coming.
Where's this ad playing?
Or do you get up?
I gotta start using an ad blocker. I don't even know where this is coming from. Gosh. All right. Anyway, so what happened today? They filed with the Hong Kong Exchange that they had received what did they call it? A demand or something for a guaranteed bond based on a joint venture that Evergrande had. Now, it's a $260 million demand, and what I suspect happened is this has to do with this Jumbo, what was it called? Jumbo Fortune Inc. Talk about a red flag name, right? Don't ever invest in something called Jumbo Fortune or any facsimile thereof. My God, these names are awful. So these bonds had matured back in October for $260 million. Now, Evergrande did not make the payment. They entered their 30-day grace period. Before that 30-day grace period expired in November, they secured an extension of 3 months. And as the terms of that extension, they had to post additional collateral, and they had to implement some kind of monitoring mechanism for the bondholders to keep an eye on things. Right? Well, apparently, Evergrande failed to meet those obligations. So now those bondholders have demanded payment on these guaranteed bonds. Now, the 30-day grace period has come and gone a long time ago, so it appears that these bonds are now in default. And the big thing is that Evergrande mentioned in this filing with the exchange that this may pull forward due dates for other obligations, and I think that is them alluding to these cross-default provisions in these onshore bonds. There's this rider in all of these bonds that a default on one is a default on all. So if these jumbo Fortune Enterprises bond is now in default, that means all of those offshore bonds are now in default. That would be huge if that really is the case. So Evergrande filed with the exchange, and they talked about this, and they said they may not be able to make this payment because, keep in mind, they have another payment that is due in 3 days for their November 6th bonds that they didn't make their payment on. So these guys are hosed. All right, they cannot possibly pay their debts off. It's just a matter of time. But this may be it. Their time may have finally run out. So I just want to read a little bit from this article. China's Guangdong province on Friday summoned the chairman of China Evergrande Group after the real estate developer said there was no guarantee it would have enough funds to meet debt payments while regulators sought to reassure markets. Evergrande, skipping that background. On Friday, the company said in a filing to the Hong Kong Stock Exchange that it had received a demand from creditors to pay about $260 million. It's already late, paying $82.5 million in coupons due on November 6th. In light of the current liquidity status, there is no guarantee that the group will have sufficient funds to continue to perform its financial obligations, Evergrande said, adding that creditors may demand accelerated repayment if it does not. Now, that line there, they may demand accelerated repayment if it does not. I think that is an illusion. They're hinting at these cross-default provisions. If they don't make this payment, they have defaulted on everything. And that would be big. Sorry, I got a frog in my throat today, folks. That prompted the government of Guangdong, where the company is based, to summon Evergrande chairman Hui Kai-yan. Now, somebody made a comment about, did he disappear today? This may be, the rumor mill running rampant with this part of the story. The provincial government said in a statement it would, at Evergrande's request, send a working group to the company to oversee risk management, strengthen internal controls, and maintain normal operations. Yeah, I seriously doubt the company asked for the Communist Party to send them a working group to make sure things run smoothly at headquarters. Yeah, they requested at gunpoint, maybe. The Guangdong authorities were not the only government entity to wade into the Evergrande issue on Friday. In a series of apparently coordinated statements late in the evening, China's central bank, banking insurance regulator, and a securities regulator sought to reassure the market that any risk to the broader property sector could be contained. Evergrande's problem was mainly caused by its own mismanagement and breakneck expansion, the People's Bank of China said. Short-term risks caused by a single real estate firm will not undermine market fundraising in the medium and long term, it said. The China Banking and Insurance Regulatory Commission said the Evergrande issue would not affect the industry's normal operations. Look at all of these Communist Party hacks coming out and assuring everybody in unison that everything is A-OK and number one at Evergrande. No problem here, right? Just rolling out one at a time. It added that it believed domestic and overseas regulators would deal with Evergrande-related issues fairly. Now, where was the line that I just loved? There was a line in here that said sales had... here we go. This line, I just love this. Adding that housing sales, land purchases, and financing have already returned to normal in China. That's from the People's Bank of China. What a crock of dog poop. No way, folks. Sorry, I keep coughing on you guys. Short-term risks will not undermine market fundraising, and housing sales, land purchases, and finances have already returned to normal in China. That is a government official coming out and publicly saying that. You got to be kidding me. And look, I don't know if you realize this, but the more that these Communist Party hacks come out and assure you that everything is fine is when you know things really are not fine. Right? This is how you know things are getting very bad in China. Now, there was another story that came out today that I also think could be related to Evergrande, and that has to do with the Didi delisting. All right, Didi is like the Chinese Uber, right? Their IPO in the U.S. was a total scam. The Communist Party let them IPO in the United States, and then as soon as they IPO'd in the United States, and they IPO'd at like an $18 price, all of a sudden the Chinese government says, no, you can't list in the United States anymore. and the stock immediately fell to like $5, and now they're being delisted and they're going back to Hong Kong, which means this company just stole billions of dollars from American investors, and they're out. All right, this was a scheme, and this is why I've been saying for years. I haven't had a channel for years, but I've said all along, I will never touch a Chinese company because at any time, the Communist Party could just take what you have. And that's pretty much what they did here. Now, this story, associated with the Didi story, an end to foreign IPOs by Chinese companies. Beijing is planning to close a loophole that let firms like Didi's list overseas. Now, this could be related to Evergrande. This is in Fortune magazine today. China is planning to ban companies from going public on foreign stock markets through variable interest entities, or VIEs. All right, now a VIE is when you have a Chinese company that sets up a shell company or a subsidiary or whatever in, say, the Cayman Islands, where all the profits from the Chinese company go to this Cayman Islands holding company where foreign investors can buy shares and basically access those profits. And this is a way that Chinese companies have gotten around these overarching laws in China that limit Chinese companies from listing overseas. Well, now China's government is saying they're going to ban this practice. According to people familiar with the matter, closing a loophole long used by the country's technology industry to raise capital from overseas investors. The ban, intended in part to address concerns over data security, yeah, right, is among changes included in a new draft of China's overseas listing rules that may be finalized as soon as this month. And again, like anything coming out of China, you have the quote, said to people asking not to be identified discussing private information, because nobody will ever be quoted. And the press will never have a source for any of their stories, so I guess we have no choice but to just believe them. Companies using the so-called VI structure would still be allowed to pursue initial public offerings in Hong Kong, subject to regulatory approval. Companies currently listed in the U.S. and Hong Kong that use VIs would need to make adjustments so their ownership structures are more transparent in regulatory reviews, i.e. they're all going to get delisted from U.S. exchanges. Keep in mind that this Baba, Neo, right, all of these Chinese companies could be affected by this, especially in sectors off limits for foreign investment, the people said. It's unclear if that would mean a revamp of shareholders or, more drastically, a delisting of the most sensitive firms, moves that could revive fears of a decoupling between China and the U.S. in areas like technology. Now, the reason I say this may have something to do with Evergrande is I've said in my videos before, Dr. Metzler was over in the Cayman Islands, and he's filing his lawsuit in the Cayman Islands against Evergrande because that's where they're registered. Well, according to this new change and this new filing in China, Evergrande wouldn't be allowed to be registered in the Cayman Islands anymore. Well, if they're no longer registered in the Cayman Islands, how does Dr. Metzler sue them, or where does he sue them? Is he going to go to court in China? I'm sure Chinese officials would just be tripping over themselves to give Dr. Metzler his day in court, right? Not so much. So this may be a defensive move. Again, I might be going a little too far with this. I might be stretching this one a little bit here, but I'm not convinced this is not related to Evergrande. It could be, it could not. On that note, I just want to add, I talked about this in my video today also. DMSA, Dr. Marco Metzler, has delayed his lawsuit until early next week. He said based it on difficulty finding a liquidator. I don't really know what that means, but I know things with lawyers tend to move at a snail's pace. So we will not have any developments from Dr. Metzler anytime soon. So this was a very big development in the Evergrande story today. I think this news could be huge. Again, when the tide goes out, we find out what's been going on beneath the surface. We find out what has this Ashmore outfit in London done with all of this Evergrande debt that they bought up. Did they use it for collateral to short meme stocks? Maybe. Did they borrow? How much did they borrow against it? What happens when this collateral is worthless? Do they get margin called? Does that trigger the MOAS? Yes, please. Maybe not. God knows we need it. AMC got absolutely crushed this week. Absolutely crushed. I'm still holding, though. I have not sold my AMC. Anyway, let's check out some of these comments here. At my LCS in my area, mysteriously instantly sell out when price moves down at options expiry. Yeah, they pull it off the shelves. They don't want to sell at that price. I wouldn't be surprised to see that. How do I beat the high premiums on silver? Chuck, that's one reason why I'm looking into Kinesis as a way to invest in silver without getting the high premiums. Um, I still have my issues with Kinesis and the way that funding the account works. I'm not comfortable wiring money to a guy in Jakarta. I'm just not. So I still am not involved in Kinesis at all. Supposedly they will have ACH transfers back very soon, and when that happens, I hope to be able to have my Kinesis account up and running in time for this big sell-off, because I would like to be able to buy exposure to silver that way. Um, but yeah, there's other ways like PSLV, which again you pay a little bit of a premium with PSLV, and they have management fees. But there's other ways to avoid the premiums. But again, you're trading some of that safety, right? If you don't hold it, you don't own it. That's the adage. So you're trading your lower premiums or your no premiums for a little bit of that security of having the physical in your possession. So that's really an individual decision. That's up to you if you want to do that. I have created my Kinesis account, but I haven't funded it yet. I didn't get that far because, like I said, I'm not wiring my money to a guy in Jakarta. I'm just not going to do that. The premiums will eat up slack when the big drop comes. Good call on Corin. Thank you, Tom. And again, I am looking into ways to avoid those premiums if I can help it. Kathy Wood, ARC ETF, quite down today. Yes, Volker, it is. Talking about other things that I would not touch with a 10-foot pole. Anything having to do with Kathy Wood is something else. She has had a very good run these last few years. So, I have no place to talk, I guess, because I haven't done as well as Kathy Wood. But all she's doing is riding momentum, right? It's just bandwagon investing. It works until it doesn't. So whatever, if it works for her, good for her. But I wouldn't trust her with my money. Do you think China could dump U.S. bonds as a kind of revenge? Dave, I've looked into that, and they've already been dumping their bonds. China has been selling off a lot of their treasuries over the last few years. They only hold, I think, about $1 trillion now. So China doesn't really have the pricing power with U.S. debt that they used to have. Now, it's happened very quietly over the last few years. China has been dumping it. The Federal Reserve has been printing money and buying it up. That's alarming. So you could say that through dumping our debt, what China has done is they have added to the inflation problem in the States indirectly. But right now, China doesn't really hold that much of our debt anymore. They really don't. And also, if China dumps our bonds, they'd be lighting their own money on fire. So it would cost them. Maybe they would do it thinking it would hurt us more. I'm not that fearful of China dumping our debt, to be honest with you. Especially with what's probably going to happen to their currency coming out of this real estate collapse and what they're going to probably have to do to their currency. They're going to need all the U.S. dollars they have. So I wouldn't be surprised to see them hold on to that debt. It starts with war in Taiwan, Cole Marsh. I wouldn't be terribly surprised to see China try to deflect public anger away from itself by starting a war with Taiwan, right? Think about how the Falkland Islands war started. Argentina invaded the Falkland Islands because they had an economic collapse, and the, what did they call it? The junta government in the Falkland Islands tried to steer public anger towards the UK by invading the Falkland Islands. It didn't work. They lost the war, and that government ended up collapsing anyway. But it was a wag the dog kind of scenario where they were just trying to take all this anger pointed at them and try to aim it at some foreign entity. So I wouldn't be too surprised to see China try a move like that. If things got really bad after the housing collapse, they may start a war even before they're ready, knowing they probably can't win it, just to survive. Because again, what does the Communist Party fear? They don't fear Taiwan. They don't fear the U.S. They don't fear Russia. They fear their own people. That's who the CCP fears. So yeah, they would get into a war with no plan for victory just to stay in power. I could see that happening. They will dump U.S. bonds because they have no choice. It's an interesting thought, Karen. They may need the money. Again, they may need those dollars because I think their currency is going to go down faster than ours. I could be wrong. Ray Dalio can't shut up about investing in China. I wonder what his exposure is. Yeah, if Ray Dalio is sitting there saying China, all in on China, that means he's selling. All right. When these guys are on CNBC, these fund managers, what they're doing is they are shopping their book. That's what they're doing. They're trying to convince you to buy what they're selling. So, ever since it was who was it? Ackman. Since Ackman went on March 23rd and talked about how, was it Hyatt? I forget the stock. It was one of those hotel stocks, about how it was going to zero and that they needed to shut down the whole everything. And this was it. The economy was in turmoil. And really what Ackman was doing was he was buying that stock up hand over fist. So he's on TV scaring the crap out of people while he's buying secretly. And it was the biggest trade in history. I think it was the single most profitable trade in history, what Ackman did on March 23rd. And I'm really amazed that nobody has made a movie about this yet. Probably because people will have pitchforks and torches in their hands if they really find out in numbers what Ackman did on March 23rd of 2020. But there really should be a movie about that. As a matter of fact, let's get one made. Why hasn't that movie been made? Hollywood, what are you doing? What are you doing? Anyways, we've got enough guys on YouTube. There's enough channels out here with enough of an audience. Let's get these people to make a movie about Ackman's March bottom. That I tell you, man, I really, really have issues with CNBC because they still have him on, right? After what he pulled, after how he went on TV and scared their viewers into selling what he was trying to buy up, CNBC still invited him back on dozens of times since that happened. How is he still given a platform after doing that? But anyways, I'm getting heated here. I better slow down, huh? Have heard about government paying farmers to plow under their corn, and they're taking the dirt and filling containers and sending topsoil to China. I saw a story about paying farmers to destroy their crops last year. There was some of that going on, but I think that got a little bit. I think the rumor mill took that one a little bit far. This year. They definitely won't be doing that. Paying farmers to destroy their crops. That's done. Not now. Not with fertilizer prices doing what they're doing. I'm telling you, the food inflation that is on the horizon, it scares me. You think we had a lot of social unrest in recent years in the U.S. and in the world? You wait. It's probably going to be the defining attribute of 2022 is going to be social unrest. Maybe I'm early on that call. Maybe it'll be 2023. But I think globally we're looking at much lower crop yields across the board next year. Don't buy products from China, says Svetoslav. I'd love to do this boycott China thing, but have you looked at the boxes in Walmart? Freaking everything is made in China. Right? I don't know. I got to look at this T-shirt. I'm willing to bet this T-shirt was made in China. This monitor, this microphone, everything around me was probably made in China. So I don't know. Boycotting China, it sounds great in theory. I just don't think we can do it because we don't make anything. The U.S., Europe, we don't make anything. All we make is dollar bills in this country. And we don't even do that anymore. We just do it digitally. We don't even print money anymore. Dookie, sir, thank you very much for the super chat, for supporting the channel. Do you think silver will skyrocket EXT next year with the mines in Peru going national and possible Mexico going national as well? Do I think it'll skyrocket next year? I've followed the mine stories. When the mines go national, like what we've seen with like Venezuela and oil production, right? When governments nationalize mines or they nationalize oil production, it doesn't really affect the production in those mines or those facilities right away. It takes a few years to filter down because government-run enterprises inevitably destroy themselves because they're run by imbeciles. They're run by idiots. Right? The government sucks at just about everything it does. So those mines, if they do nationalize these mines in Peru and Mexico like they're threatening to do, it's not going to affect their silver output right away. Within a few years, probably, but not right away. So no, the mines getting nationalized, I don't think that's going to hit silver next year. I think if the market sell-off happens, once that initial dumping of all asset classes is over, I think the flight to safety afterwards could send silver up significantly. And I've also talked about the Evergrande story and how I think that could, over a period of several years, lead to silver supply shrinking significantly in the world, and that could send silver prices skyrocketing. But that won't happen next year. So to answer your question, Doogie, no, at least not in the short term. That may be the long-term result of those mines getting nationalized, but not right away. And again, sir, thank you very much for the super chat and for your support. I appreciate that very much. Next week, Tuesday, Kaisa get into the fail, says Thaddeus. I agree. I think Kaisa and Evergrande both have coupon payments due on the same day, and Kaisa has already said they can't pay on Tuesday. And they have been in talks with their bondholders to try to delay that payment. I think they're asking for a couple of months. I don't remember the exact duration, but they're basically saying trade in your bonds for the same bonds, we'll pay you back in another year, which the bondholders are saying, you're not even going to exist in another year. Thanks, no thanks. Pay us now. So, and I think they need to get like 95% of the bondholders to agree to that in order for that extension to happen, which it's not going to happen. So I think Kaisa is probably done next week, unless we get more of this nonsense with the press where they just go out and lie and say the payments were made, and all these bondholders just play along because they realize they're holding hot garbage, and the only way they could ever sell it on unsuspecting investors is to lie about the interest getting paid on it. I think that's what's going on with Evergrande, hence Dr. Metzler's lawsuit. Conrad Olson says, I buy Bitcoin in Coinbase and then transfer it to Kinesis. I used to use Coinbase, Conrad. When I first bought Bitcoin, I used Coinbase. I don't like their fees. I don't like that you can't get somebody on the phone. And I don't like that every time there's a big crash or some major event, they tend to have very conveniently timed technical difficulties, which most of the crypto exchanges do. That's why I changed over to Swan, and I haven't had any issues with Swan yet, so I have nothing but good things to say about Swan. I have a link in the description to this video. If you click on that link and sign up for a Swan account, you'll get $10 in free Bitcoin. Full disclosure, that is an affiliate link. I'll always tell you guys when I use affiliate links. But I will also tell you, I will never join an affiliate program that I don't also use myself. Okay, so like Swan, I use the affiliate link in Swan. I use that because I have used that with my own money, and so I feel comfortable promoting that application because I've got a personal vested stake in it. All right, so one of the reasons why you won't see me using affiliate links with like BlockFi or Celsius or some of these other ones out there because I don't use those applications. I don't trust them. So I'm not going to promote them on you guys. Just letting you know, like I am going to be very careful with affiliate programs and things like that because I'm not going to try to sell you guys dog shit. All right, that's all. I just used the S word. I probably got my live stream flagged. That'll cost me a few hundred viewers, whatever. Who else? We have Duke. My take is that Mexico and Peru are going to war with Wall Street on the silver price. It's ridiculously low. Definitely will limit supplies to increase pricing. But NSF will know more than me. New variant. That's an excellent thought. I hadn't looked at it from that angle, to be honest with you, that may be why these countries are looking to nationalize the mines. They may be sick of getting underpaid. And if you think about it, who suffers the most? I mean, besides the silverbacks and the Wall Street silver guys and Reddit, who was really suffering from these manipulated low silver prices? It's the guys working in the mines in these mostly poorer countries, right? They're not getting, think about how much more money these guys could be making, how much more profitable the mines could be, how many more mines there would be, more jobs. So they're really the biggest victims out of this. So that's an interesting take, New. I never thought about that might be why they're talking about nationalizing those mines. I don't think nationalizing the mines is a good idea, though. I'll just say that because governments run operations into the ground. They've always done it. And Dumb Money Media, sir, the king of money, thank you very much for your super chat, for supporting the channel. Uploading some vids this weekend from interviews of those Twitch streamers. Once I'm done with them, you can drop your melon into the ring. Thank you, Dumb Money Media. Dumb Money Media launched a series called Schiller's Corner on his channel. I highly recommend you guys check that out. He has been a regular on this channel, and he is just, I love the name Schiller's Corner, by the way. It is so upfront, and it's so like, yeah, people are here shilling their investments, creating a over-the-top, comfy little nest for shillers. Like, it reminds me of the Big Short. I know it's cliche, but the scene with Jared Vennett when they're saying he's so transparent in his self-interest, it's almost refreshing. So I thought that was a great name, Schiller's Corner. So thank you again for the support, the King of Money, and I wish you all the luck with your channel. Keep up the good work, brother. There's only one ultrasound money, says 00. There's only one ultrasound money. That's interesting. Is it gold? Is it silver? I don't know. I mean, if I had to pick one, I'd probably say gold as the ultimate money, although has gold been used longer than silver? I don't know. Anyways, I like them both equally. I like silver because I think silver is the more manipulated of the two. Watch for continued permit cancellations or passive non-renewals. FSM is a great example of permit management. I don't own any FSM. I did own them last year. I did pretty well in FSM last year. They're on my watch list, but I haven't been following that story that closely. China's coming out with gold-backed currency, just like the U.S. Treasury notes. That's interesting. Bike rhyme? Sorry if I'm saying that wrong. I would not trust a gold-backed currency coming out of China. I like the idea of a gold-backed currency. China won't have the gold. I can tell you, if they're claiming they're going to launch a gold-backed currency, it's going to be an empty vault, man. Hey, not financial advice, not a financial advisor. Do your own research, your own DD. Whatever the decision is right for you, but I would not touch anything in China. Nothing. All right. Run to Minneapolis yesterday. Saw trucks bumper to bumper, 3 lanes, both sides on US 94. Go there a lot. Have never seen that. Just an observation. Products must be moving. Yeah, Tom, I think the port congestion story, I talked a few weeks ago about how I had sold my stock in Danaos, which was the shipping carrier, one of my better trades for the year. I didn't quite call the top, but I was pretty close at the top because that stock has come down ever since. The Christmas shipping season is now behind us, right? If it's not off the boat yet, it's not getting here in time for Christmas. So we should see the situation at the ports start to get better, right? It's not to say anybody deserves credit for that, although people will be lining up to take credit for improving the situation at ports. There's going to be less stuff moving because the Christmas orders are done. The retailers are no longer ordering their holiday inventory. So it should come back to normal. Now, I've heard stories about how they're just sending the ships over the horizon, so it looks like there aren't as many ships at port. I don't know if that's what's going on too, but I don't think the situation at the ports is related to the cerveza sickness or the oil variant. I think it has more to do with the currency debasement and the money printing. I've been saying that all year. All right, moving on. You're right in a call about food, and you're right about what the CCP fears. That's why they're taking the topsoil now in 2021. Famine leads to riots. 60 million Chinese starved to death in the 60s. Yep, that's a good point. And yeah, 2022 is going to be a difficult year. And maybe I'm early. Maybe the fertilizer situation will take more than a year to filter into food prices. I could be early on that call, but I think there's some serious global social unrest on the horizon. I really do. The arable land in China has collapsed. There's heavy metals in 90% of Chinese farmlands. They have to pollinate their pear trees by hand because there's no bees. It's becoming a desert. That's it. That's scary. I haven't read those stories. That's interesting. I got to look into those things, Nicole, but that is scary what I see going on over there. Is the market crashing? Says Tiny Box Vake Shop. Let's take a look. What has the market done? It's now after 4. So I don't know what they actually closed at. Let's see. Where did we go? All right, looks like the Dow rallied into the close, ended up closing down only 59 points, so had a pretty good last hour, closed pretty much flat on the day. Um, Tech sell-off was still pretty big. The Nasdaq recovered a little bit, but the Nasdaq was still down almost 2%. The Dow closed flat, the S&P down about 1%. Keep in mind the S&P is pretty much made up of the biggest names in the Nasdaq, so that's not too surprising. Looks like crude rallied a little bit. Gold had a good day. Silver had a good day. Bonds kept going down. Bond yields kept going down 7.25%. That's 10 basis points on the day. That's interesting. So you still had that flight to quality going on, that flight to safety. Bitcoin down 3,000. So it was an interesting day to close the week out. That's to say very little about it. One thing I want to talk about while my melon is already shrunk here is about what happened with OPEC this week. OPEC had delayed their meeting earlier this week because they were waiting to see what happened with this news of the oil variant. And then, they were threatening to cut back on planned output increases because of what happened with the strategic petroleum reserves and with all these countries releasing oil from their stockpiles. Well, they ended up going ahead with the production increases. So the OPEC meeting happened midweek, and they said, we're going to increase production in January as planned. But today there was this article, or this came out yesterday, late yesterday, that they're keeping the door open to reducing those production increases. So they're basically saying they're going to put a floor on oil prices. Here's the headline: oil mixed as OPEC poised to act if demand weakens. Oil prices were mixed Friday after the producer group OPEC Plus said it could review its production hike policy at short notice if oil demand collapsed due to rising number of lockdowns, while Brent was on course for a sixth week of declines. So basically, OPEC has said we are not going to let oil go down much lower than it's at. So they've put a floor under the price. Doesn't mean prices are going up, but it means they're not going to let it go down much further. And the reason I mentioned that, here's the oil chart. This is going back to early November, and you can see oil has just been obliterated these last couple of weeks, made more intense with Black Friday, with the oil variant and that big sell-off. That sell-off continued into early this week. I did a video earlier this week that said I thought that oil and that energy sell-off was ridiculously overdone and that I had bought those call options in XLE. They've traded up and down ever since. Those options I bought out to March. I think oil is going to come roaring back. Just zooming out a little bit. Where is support? I would say support's probably down in the low 60s. I don't think we go much lower from there. And again, if things set off in Eastern Europe, I can see that getting out of control pretty quickly. I also want to talk about this chart. I did a video on this one yesterday. I highly encourage you guys to check that one out. This is the yield on the U.S. 10-year Treasury. And note this purple line, because this purple line, besides connecting most of these peaks in the 10-year Treasury, when I went back and looked at the dates of all of these peaks, I found that they coincided with a lot of these major market black swan events. And you'll notice I left out the big spike from the early 80s. That's Paul Volcker fighting inflation in the 70s. And I just focused on the major events since then. Starting right here in 1987, this was Black Monday. This was the big stock market crash in 1987, and you can see yields came right down. The next time we had yields came near this line was in 1994. In 1994, we had the bond market crash that started in Japan, spread to the United States. And, as the bond market crashed, the yields rose, but they stopped rising when they got to this line. The next one we had was in late 99, early 2000. That is the dot-com bubble bursting. We had another big stock market black swan event, and we came back down. The next time we got near them, late 2007, early 2008, global financial crisis. Again, interest rates come lower. We come down, down, down. The next time we get near this line was in 2018. November, December timeframe. If you remember the Christmas Eve panic of 2018, that's when Jerome Powell very abruptly went from hawk to dove, and he started lowering rates. And that's when the rate decline really started that flowed all the way through 2019, through the repo madness situation, into the pandemic, and takes us to about where we are right now. And to me, what this line represents is this represents the United States tolerance for interest rates. And since we are debt drug addicts in this country, we are absolutely dependent on cheap access to money. We're dependent on quantitative easing, and we cannot stomach higher interest rates. And since 1987, the amount of an interest rate that the economy can stomach has been in decline. And every time we get near this trend line, there is some big major market event. And the reason I use that is you may have heard me say on some of my live streams that I think the next big market crash happens between 2 and 3% on the US 10-year. Now that is basically this trend line with a little bit of a cushion built into it. Because if you look over the course of the next year, if we get anywhere near 2.5% now, and this trend line continues to come down towards the end of next year, it'll be really closer to about 2%. If we cross over that line, I think that's when we get that big market sell-off. And as this trend line continues to work its way down, we're slowly getting to the point where the United States cannot stand any interest on our debt. Not any. Because sooner or later, this trend line is going to cross zero, and we'll be stuck with negative interest rates forever. And this is because since the 1980s, this mountain of debt in the United States has just continued to get bigger and bigger and bigger. As the debt pile gets bigger, the amount of an interest expense we can afford gets smaller and smaller. And that's why we have this downward slope. And we're at this point now. If we get anywhere near 2.5% on the US 10-year in the next 6 months to a year, I think we are going to get a major, major market sell-off. Now, keep in mind, they are forecasting at least 2 rate hikes next year. All right, now if we're at 1.3% right now, 2 rate hikes gets us to 1.8%. Excuse me. And with the planned taper and with all of the new debt that is about to hit the bond market when the debt ceiling gets raised, I think we could get near that purple line very, very soon. All right, so keep an eye on this line. All right, keep an eye on the U.S. 10-year rate. I think this is when the S hits the F, if we get anywhere near that line. Now, my plan, I told you guys I've been raising cash. My plan is to, and this, again, not financial advice because this is a very risky trade, but if we get anywhere near this line, I plan to go short the S&P 500, short the market somehow. Now, the last time I shorted the market, it was the best trade of my life. I went short the market in January of 2020, and that was based mostly on what I had seen in repo madness and what I saw interest rates doing. And then as soon as I saw the situation developing in China, I went majorly short the market. That ended up being the best trade of my life. And I bought call options in SDS back then, which is this ultra short ETF. Now, I don't think I'm going to do that this time around when I short the market because I kind of like this UVXY ETF right now, which is basically a levered VIX futures ETF. And, just looking at what it's done over the last few weeks since we've had this big spike in the VIX along with this market volatility, this has done really well. It's been incredibly volatile, but up, up, up. So my plan is to probably buy some of this. If I see this interest rate on the US 10-year get anywhere near this purple line, I'm going to put some of this cash that I've been raising to work, and I'm going to buy either this ETF or buy call options in this ETF. Now, that would be very risky, all right, because these levered ETFs just absolutely hemorrhage cash even when the market trades sideways. So you have to be majorly right. But just going back and looking at this trend, I don't think the market is going to stomach anywhere near this line. And if we go over it, certainly not. So that's my plan. Again, not financial advice. That is a very risky trade. So I'm ready to take a bath on that if I have to. I just thought I would share that idea with you guys. All right. Dumb Money Media, sir. Thank you again for the super chat. from the king of money, from the streamers I've talked to so far, they have no idea what I'm talking about except for inflation. Hopefully they will take interest soon. Well, from the streamers I've talked to so far, well, give them time. Give them time, King. I think you'll do just fine. Just stay with it. That's my only advice. Stay with it. All right. I mean, I'm sitting here. My subscriber count just barely moves on a day-to-day basis. I'm going to keep cranking out the content. I enjoy this time with you guys. I enjoy taking your comments. So I'm gonna keep doing this as long as I can. Eat the boomers, says 00. I'm not going to eat the boomers. Love you, Mom and Dad, if you're watching. My parents are boomers. I'm a Gen Xer. Dumb Money Media says, I've been buying UVXY too. Really fun play. Congratulations on that. If you bought that anytime recently, you have made a killing, King of Money. I have not bought UVXY yet, although looking at this chart, I sure wish I had. Also, there's that Twitter feed, The Last Bear Standing, who I've referenced on this channel a couple of times before. He has been pushing this one quite a bit, and, well, he was right about this one. Karen Shea says, consider SQQQ to short the S&P. I believe SQQQ shorts the NASDAQ, and I did use that one during my last time. That's also one of the ones that I bought. Let me verify that that's the SQQQ shorts the NASDAQ, which I think is also a safe play. But anyways, just looking at that VIX ETF, I did really well on the SQQQ and the SDS, along with a couple of these other short ETFs that I bought when I shorted the market in 2020. But I got lucky. You know, again, a more seasoned trader could probably tell you all the things I did wrong. And I should also add the caveat, the reason I'm using these ETFs is because I don't trade on margin under any circumstance. Okay, I like defined risk. I don't like trades where my risk could potentially be infinite, and that's why I never touch margin. I don't borrow money to invest. I only play with the house's money, with my money. I don't borrow, all right? And right now, looking at the markets and all of the margin debt that's out there in stock markets right now, and the fact that the CEOs and the insiders are dumping at the time the retail traders are borrowing and investing, that is a recipe for disaster. So the reason why I use these ETFs to go short the market is because I don't buy puts. I can't go out on margin. I just won't go out on margin. That's how I limit my own exposure to my own stupid decision making, I guess is how I should put it. The younger generation doesn't seem to care about the economy, only politics, which makes you zero money. You know, that's interesting. I have seen that, and it's part of how we have failed younger generations, because I think a lot of them have just accepted defeat in that realm. They've just decided that it's all rigged, which in their defense it is, right? And that there's no hope, and that they're never going to have a better life, that they're going to be poor forever, right? So it makes them not want to try. And can you blame them? I mean, look at what happened with AMC and GME earlier this year, with how they took away the buy button. I mean, just blatant, so blatant. And, you know, if you want to go a step further, look at Epstein. You know, who are they kidding? The ruling class. Who are they kidding? I mean, they're so ridiculously over the top with their lies and their corruption. So I can't say I blame the younger generations for losing hope. And, you know, I also put a little bit of that on the education system. We don't teach our kids anything about finance. We don't teach them anything about money. It's our fault. So I do have hope. I see things like this FIRE movement, the financially independent retire early movement, all right? And I see a lot of young guys coming up with a lot of really sharp ideas, living cheaply, investing their money. So there's hope for the younger generations. I think the kids will be all right. Give them a chance, all right? And they're going to have to be all right, because I think what's coming down the pipe in this market sell-off, let's just say that all that kind of stuff, it puts hair on your chest. You know what I mean? Struggle builds strength. And unfortunately, they're going to struggle a lot. We're all going to struggle a lot in the coming years, I think. But anyway, that's just my take on that. Karen Shea, Dave Yang is great. I don't know what Yang is. Are we talking about Andrew Yang? Is that what it is? I missed that comment. Nicole Post, margin is fool's game. Those drinks at the casino aren't free. That's a very good analogy. I like that. And some people have done really well on margin, but I can't see sitting there and paying interest while I'm trying to also make money on a stock and then have somebody be able to just come in and dump my shares when they see fit. I am not comfortable with that. Anyways, guys, there is one other thing I wanted to mention in this stream, and I meant to mention this last week, but I ran out of time. First of all, looking at the silver chart here, all right, silver has been just absolutely crushed throughout November. We've had a pretty good start to December here, right? I see a little bit of a hammer pattern developing there, so God knows we need it. Short term, I think we've got resistance at this 2150 level. When it comes to charting precious metals, it's really not my strong suit. So take that with a grain of salt. I highly recommend a guy like Steve Penny, the silver chartist, if you're more interested in better TA on silver. But I wanted to mention this video because I don't know if you remember, I did my my video about how I think Evergrande could lead to a reduction in the silver supply because it's going to put a lot of base metal miners out of business as China stops their building. They're going to stop using so much copper and so much steel. When you use less steel, you use less zinc. And most of the silver comes from copper and zinc mines. So I think as China's building collapse continues, I think that's going to put pressure on the commodities for these base metals. And I think their prices are going to collapse. And that's going to put a lot of their mines out of business. There's going to be a lot less silver hitting the market. And Wall Street Silver did this interview a few days ago with Dan Oliver, and I just wanted to play this segment of it for you guys.
That much silver anymore.
That's right. And also, most silver is produced as the byproduct of other mines, not primary. So there are very few primary silver mines. And so what can happen too is, if China, I've always thought China will blow up at some point. It looks like it is blowing up. And China consumes about a third of every commodity you can think of in terms of building those ghost cities that no one lives in. And so if China blows up and you see base metal mines closing, you'll see silver supply going down no matter what silver price is. Silver can go to $100 an ounce, but it's not going to save your zinc mine. So you're still going to close it down. And so you're still going to lose that supply. So it has a weird.
And when I saw this video, I started screaming, yes, yes, finally. Because up until the moment I saw this video, I was the only person in the world who was talking about the silver supply being affected by the China Evergrande story. And I was screaming so loud when I saw this interview that my wife actually came running. She thought I was having a heart attack or something, or like I was on the ground in pain. But I was so happy to see somebody is finally picking up on this. So Dan Oliver and the guys at Wall Street Silver, thank you guys for this. Again, this was about 2 weeks ago, but I was really happy to hear that. And I really do think, again, along the same lines of what's going on with the mines in Central America, I think it's going to take time. This is not going to happen overnight. But I think eventually we are going to see a major reduction in global silver supply. Now, this has nothing to do with the stock market crash or anything like that. This is long-term silver supply, prospects. I think that is another tailwind for silver prices. I think long-term we are looking at sustained, much, much higher silver prices because the metal is just going to get much more rare. And that says nothing about demand and industrial use or Green New Deal and the unicorns and the rainbows, whatever, all that other stuff. But I just wanted to share that with you guys. Anyways, we are getting pretty long in the tooth here. We've been going for a long time, so I'm going to take a few more comments, and then we're going to call it a day. Yang is the China Bear ETF, referring to the Dave L comment. Okay, Karen, thank you for that clarification. That's interesting, a China Bear ETF. I'm not going to make a call on that one way or another. I'm just not familiar with it. I'd have to look at what actual holdings are in it. I would, however, just caution you, when you guys get into ETFs, always take a look at what is in the ETF. Always unpack them. Watch that net asset value. All right, don't buy an ETF that is trading at a massive premium to its net asset value, because that means that there's downward pressure on the price of that ETF. and always know what your ETF is holding. All right. And, like this China Bear ETF, if it's all Chinese listed companies, keep in mind that the Chinese Communist Party could just come and take what you have. So just be careful. Know what is in these funds before you invest in them. At least look at like the top, 10, 15 holdings and know what your exposure is. LOL, I guess that's where all those trillions, excuse me. LOL, I guess that's where all those trillions in repo went, Chinese ghost cities. That is where all of that crap that we have bought in Walmart for the last 30 years has went into these Chinese ghost cities. Because China has financed this expansion with our money, right? We buy their crap at the expense of our manufacturing base disappearing. They take our money and they use it to build these ghost cities. They leverage it. They borrow against it infinitely, of course. But China's reckoning is coming. I mean, it's here, and not for nothing. China's reckless borrowing and expansion, that reckoning is coming, and the United States debt reckoning is coming. And I think they're coming in the very short term. These two things could happen simultaneously, and it sucks because the rest of the world is going to get caught up in this mess. King of Money, love you, Mang. Have fun this weekend. Thank you, sir. You too. Have a good weekend. I want you guys all to have a good weekend. When it comes to silver, are we that smart or is the rest of the world that foolish? Says Tom Stencil. I wouldn't say foolish. I'd say are the people in charge of silver markets really that corrupt? I think that is really the deal. I think anybody who spends a couple of hours bothering to educate themselves on the market dynamics with precious metals will arrive at the conclusion that these markets are outright rigged. And it's not hard to see that. It really isn't. It doesn't take a lot of brains. I think most people don't bother to look. And I think a lot of people are just getting so rich off of it that they allow it to happen. So I would chalk that up to corruption more so than stupidity. Although, what was the quote? Somebody had a really good quote in one of the comments, and it said something like never attribute something to malice that could also be explained by stupidity. I'm misquoting that, but it was something like that. So maybe I have that one backwards. Maybe it is stupidity, but I think it's more corruption. And then Nicole says, but why turn that money into ghost cities? Why dig a hole just to fill it? So there's a lot of reasons that drove those ghost cities in China. And it's if I would be grossly simplify things, it comes down to the inherent failures of communism. All right. The Chinese, keep in mind how China works, right? Your only way to advance in China is to increase your standing with the Communist Party. So you've got the Communist Party at the national level. And they say down to these regional governments, you will expand your GDP by so many % this year. All right, this is a mandate handed down to these governments. You will grow your GDP by so many %. So the regional governments say, well, if I want that cushy job at national, I better meet those demands. Also, I don't want to disappear in the middle of the night if I fail to meet those demands. So you've got this growth at any cost mentality, starting at the national level, filtering down to the regional, and ultimately to the local level. So these guys must hit their growth targets. So the best way to hit your growth targets is to keep the construction going. Even if you know nobody needs this buildings, I need this building to get built so I can keep my job, so I can advance my career, so I can not disappear in the middle of the night. So they have just kept building. Now, the other thing they did is these local governments, the way they get their money is by selling or leasing this land and also by borrowing against the land. So they need the real estate market to keep going because they're funding their municipal governments with the real estate market. So everybody in China at every level of government needed that growth to continue, even though it has been obvious for more than a decade that there's a real estate bubble in China. They've all known it, but they needed that growth to continue. And in China, it's very hard for the Chinese government to change its mind because they don't have elections every year, right? So in order for the Chinese Communist Party to change direction or to change policy, it kind of implies that they were wrong. And that's why they kept the one-child policy for like 10 years longer, 20 years longer. Well, they never should have had it to begin with. But even after it became obvious that the one-child policy was going to lead to a population collapse in China, they kept that policy in place for like another 10 years because it's really hard for this draconian government to admit, yeah, we got this one wrong, guys. Because in communism, the state is this almighty, can-do-no-wrong entity. So they can't just change policy very easily. It makes them look bad, and they're afraid of looking bad. So all these stupid policies, the one-child policy, which is leading to the population collapse, which is one thing that's leading to this real estate market collapse. There are fewer people coming of age to buy homes now than there are people dying and getting old in China. And it kept this growth at any cost policy in place for way too long. So they kept building these cities, even long after it was obvious that nobody wanted them. Nobody was going to live in them. There are not enough people, even in China, to live in all these buildings that they're building. And that's a bold statement. It's like 1 in 5 people in the whole freaking planet lives in China. So it really comes down to just what an awful, awful way of life communism really is, and how it is just destined to fail. They gave too much power to this central government that made these stupid decisions on behalf of everybody, and now everybody's going to suffer because of it. And Jesus, in Shenzhen, 45 years of the average salary is what the median home price is. 45 years. All right, so say you make $100,000 a year. If you live in Shenzhen, the average house would cost $4.5 million. Do you think that is sustainable? And when it was $4 million, you think somebody would have said something and said, guys, we've got this housing bubble. We need to do something. No, they waited until it got to 4.5. They didn't change their mind when it got to 2, when it got to 3 million, when it got to 3.5 million, when it got to 4 million. They kept this stupid policy in place until the median home price was 45 years of the average salary. My God, the stupidity. I mean, it really defies logic. It's just systemic corruption and stupidity. That's the only explanation for it. Anyways, guys, it is now 4:47. I've been going for more than an hour and a half. This is my longest live stream ever. I could probably go for another 2.5 hours if you let me. But you know what? It's Friday. How about we just let the weekend start? What do you guys think? Should we let the weekend start? And did I miss somebody here? No, I didn't miss him. Okay. Just making sure I didn't miss one of you guys. I want to thank you guys very much for all your comments, for all your ideas. You guys that keep sending me stuff on Twitter. You send me your comments here on the live stream. You send me links, emails I get all the time. You guys, there's this like network that is developing around the channel where I'm getting news faster now because I get so many links emailed to me. So I just want to say thank you to you guys. That is definitely having an effect on the channel. I feel like it's making the channel better. So you're a vital part of that, and I just want you guys to know I'm very grateful for that. Also, thank you to everybody who sent me the super chats for supporting the channel. And I think we're going to call it there, guys. I want you to have a great weekend. All right? Get those melon heads working. Get those ideas churning. And we will see you guys on the next one. Until next time, guys, live small and dream big.